and welcome to News You Can Use. I'm Lisa and I'm here to run through some of the main personal finance news headlines from last week to see how they impact your money life. The first thing we are talking about is what we have spoken about all of last month, inflation. Now in the news headlines, you can see cooking oil prices are going up. And of course, you can see the petrol and diesel prices are going up. Cooking oil prices are up anywhere between 2 to 8%. Palm oil prices, of course, according to the article, have fallen, but those have increased over the last 2 years anyway. Petrol prices, diesel prices have been increased slowly every day for the last few days. And I think the petrol price increase finally is at 5 rupees 60 paisa. So it's quite a significant amount. Both these put together will start percolating to goods and service across the board. You will find that all your cooked food that you get delivered from restaurants or even from home cooks, all those prices are going to get revised upwards. And, watch out for other kinds of price hikes as well. So inflation is real and it is going to come to your doorstep very soon. Okay, next, SEBI to Ruchi Soya allow FPO investors to withdraw bids. Okay, so what has happened here now and why am I talking about it? It's a very specific news related to one company. Yes, and if you are, investors who put in application for this FPO, follow-on public offer from Ruchi Soya, then you know that you could have withdrawn the bid. However, that the reason I'm picking this up is not because of what has happened, but to show that regulated assets like equities, in this case, see what has happened was that there was a SMS doing the rounds, nudging people to invest in the follow-on public offer. However, SEBI, which is the market regulator for capital markets and equities, thought that it was not right. There was something wrong with that SMS. It was not right to solicit people to invest like this. And hence, it has chosen to take the initiative to let investors withdraw their bids in a given window. Now, this is something that can only happen in regulated assets where even the intent of fraud can be stopped by the regulator. It is not something that you will see in unregulated assets where you can lose your money over these kind of SMSs nudging you to invest in things where you don't want to invest, but giving you a kind of false view of what kind of gains you can make. So this is a very, very good example of why regulated assets are what should constitute bulk of your portfolio, and only money that you're willing to lose completely is something that you can put in unregulated assets like some of these virtual assets and cryptocurrencies that are doing the rounds. Okay, speaking of cryptocurrencies, we have Bitcoin. Bitcoin has seen quite an uptrend in the last few days, and prices have shot up. This headline is speculating that market participants are eyeing 51,000 as a level for Bitcoin. Now, this is again a luring kind of headline, which might make you think that if you don't invest now, you'll lose out on this gain upward to 51,000. But look, you don't know if it's going to go there. Last 6-7 months, the whole price trend in Bitcoins and cryptocurrencies has been really, really volatile. And you shut your eyes for too long and you'll be looking at losses. So I think best to ignore this. If you are investing in Bitcoin for long term, then definitely ignore this. And otherwise also, these are volatile assets, and as we just spoke, unregulated assets. If something untoward happens, you do not have a recourse. There is no regulator sitting there to help you out. Okay, what else? Investors upbeat on realty may consider ICICI Pru's next fund. So ICICI Pru is launching a real estate fund. There are reports which suggest that the time correction in the real estate market in India, which has not seen much change in price over the last 6 to 7 years, may be over, and as demand is now spilling over and growing at a rate faster than supply, which means that prices could be looking to move up. Could be, yes. This is clearly a sectoral or thematic fund. Now, these funds rely on the cyclicality of the industry itself. There was a housing-based fund launched by HDFC called Housing Opportunities Fund in 2017 with the same view that the market is changing, the demand trend is changing, and housing market looks good over the next 3 to 5 years. However, 5 years later, the fund has delivered a annualized return of just over 5%. So sector funds are highly cyclical. You are actually making a calculated estimate of what the entire industry, the sector is going to do over the next 3 to 5 years unless you have some solid evidence, you're sure about it. Just like the fund house which is launching this fund, don't go overboard investing in this. You may invest a small portion of your overall equity allocation if you are sure that this is a sector that you want to gain from. Also, you must have some kind of a entry and exit strategy worked out, that if you're buying now, then how long are you going to give this fund to deliver the kind of returns that you're expecting. This is not a hold it and forget it kind of diversified equity fund. Remember, sector funds and thematic funds always have a higher risk as compared to diversified equity funds. So knowing these things, then you take your call of investing in this fund. All right, what's next is ONGC's offer for sale. This headline suggests that you can make substantial gains by applying to this. Again, this is a very tactical strategy for equity investors. And if you're into this kind of short-term, tactical kind of gains, then you can look at it. Of course, ONGC is a very high dividend-paying stock as well. And the offer for sale, the price for that will be below the market price, and hence they're expecting the gains. It's not something that long-term investors need to take out time to understand and go for. If you want kind of short-term kick in your portfolio, then you can. But all this is subject to market risk as well. If the markets don't do well, then whatever calculations you have may go for a toss as well. So tactical strategy, long-term investors don't really need to bother about it. Okay, lastly, Axis Bank is acquiring Citibank's consumer business. Citibank is moving out of India. In 1990s, a lot of private foreign banks came into India, set shop, and there was an entire excitement around it. Everybody wanted accounts here in these banks, but it was difficult to get. 3 decades later, it is changing. An Indian private bank is taking over Citibank's consumer business. If you were an account holder with Citibank, you will move to Axis. There will be an entire process to it. Your bank relationship managers, your checkbooks, your credit cards, everything will change. There will be a process. You will get intimation. So keep following those emails or SMSs that come to you to see what you need to do so that you are in the process. Axis is a big bank. It's one of the largest private sector banks in India. So I think it's a transition. So stick with it and see how it goes. But it's definitely marking a change in the way banking is done in India. Foreign banks have realized that it's not a market that's easy to crack. And the private sector Indian banks are the ones who are really taking up the incremental market share in this business. So it's not a bad deal if you are a customer with Citibank. Okay, sorry, that was not the last one. The last one is really, we are talking about changes coming in from April. What happens is March 31st is the end of the financial year, and April 1st is the beginning of the new financial year. And in this case, we are moving into FY23, which is the new financial year. Certain things will change. The important changes that you need to keep in mind are the linking of Aadhaar and PAN. This is something that's been going on for a long time. The government wants you to link Aadhaar and PAN, which should have happened by now. If you haven't, then your deadline has been moved to March 31st, 2023. But any change that you make now will be subject to 1,000 rupee penalty. Okay, the next important change is your crypto tax, which is coming up from 1st of April. What's going to happen is that you have to pay a 30% tax on gains in your cryptocurrency transactions. Also, you cannot set off losses from cryptocurrencies against those gains. So taxes are here, and also there's a 1% TDS on the transaction amount. So be ready to pay your taxes on virtual assets as well. Lastly, your post office account. If you have a post office savings scheme, it needs to be linked to a bank account to receive the interest. So everything is going digital, and this is pretty much part of that journey. So there you have it, all the news you can use from last week. I look forward to doing another one next week. Thank you.